on the card today. So excuse me on that. Brent isn't waiting around though to see my face, up $2 or 2% this morning on news that more news, I suppose. This has been creeping out now for about 2 weeks that India is going to do a deal with the US to stop or at least start reducing its import of Russian oil. Of course, the biggest importer of Russian oil since the invasion, Russia's invasion of Ukraine, as seen by the West, the G7, and by most importantly Washington, increasingly as a violation of its sanctions. Mukesh Sadhev, founder and CEO of X Analysts from Australia. Mukesh, what's your thoughts on this and news coming through? You think India will follow through?
Happy birthday, Sean, and good to be back. Excellent question. I don't have the answer, but what I can share is some pointers towards that.
Yeah.
Number one, if you look at I was looking at some of the trade flow data from Vortexa, Sean. If you look at July, what India was buying from Russia and what now we are buying, I think the numbers were somewhere around 2 million barrels. So the numbers have not gone down despite the rhetoric. My view is that Trump strategy comes in waves. So I would say it's not taco, it's tide. Probably is the best way to describe what's happening. So there will be news coming like this, that there is a deal, and then there will be rebuttal. So I would not put any more weight on the news, Sean. And the fact of the matter is that India will, in my view, continue to buy, as they put out the statement was very clear. They will continue to buy to provide the safeguard and the security for the energy needs of the country. So I guess that unless we see some big
Let me come at the question.
Yeah.
I was just going to come at the question slightly different angle.
Okay.
Let's bring in Rahul Kapoor on that, VP Head of Shipping and Analytics and Research at S&P Global Commodity Insights. If India was to sort of reduce or look, obviously India imported very little Russian oil, Urals, I think it is the blend, the grade, before the war in Ukraine. Now it's quite substantial. What are the limits of, or the ability of the Indian refineries to be flexible enough to okay, get rid of Russian? I didn't use it before. I'll go and use something else. How flexible is that optionality?
I think there is certainly some flexibility available, right? But to Mukesh's point, I think we have to look at two things here, right? I think in our view as well, I think the Russian crude is now a permanent fixture in the import basket. It will certainly, as in with this deal being talked about, you'll start seeing some reductions from 34% odd, let's say somewhere in 20s, right? The India is not saying we're going to stop. They're saying will over a period of time stop, or rather, in a sense, reduce our reliance, right? If you look at particularly for the refiners, what are they talking about today? I think we just heard this morning, I saw Reliance buying a lot more Middle Eastern crude. I think we're hearing, as well as India per se, looking at Guyana, West Africa, Brazil, right? So they are trying, and US as well. We started seeing a lot more US crude into India as well. So they will continue to diversify, but doubt that the Russian crude goes away from the Indian import basket anytime soon.
June Go, senior oil analyst at Sparta Commodities out there in Singapore. June, on the same question, and we just sort of teed it out a little bit more. At these prices, $60 or close to 60 on Brent and a few bucks less on WTI. At these levels, is Russian oil still attractive enough? Is the discount still substantial enough for India to continue to risk the wrath of Washington? In the past, when the price of Brent has come closer to the price cap that the G7 allows, the less attractive the Russian crude has become. Your thoughts on that, the low price impact on the attractiveness of Russian crude?
Well, the low price is, in order of magnitude, is still it's still cheap for India in terms of national security. However, when we look at crude options, it's still more economic to buy the Russian barrels. The discounts could be in $2-3 per barrel versus an alternative which has at most $1 off the official selling price. So the $2 per barrel still means a lot to India, which is very energy reliant. I think they will still be there to buy.
I think just one point, Sean. I think Mukesh can come in here as well. I think we have to
Please,
look at India's
Rahul.
domestic geopolitics as well, right? The domestic politics as well. I think just 2 days back, when President Trump made their statement, we saw the opposition parties as well as India's domestic politics effectively saying that India is bending, right? I think so that would
Yeah.
also play in. That is very, very important to understand. It's not just about the discount or the pricing. It's the relationship which India has, particularly with what it calls Russia as a fair weather friend, and how does that move forward as well, right? So it's more than the economics. Economics certainly very much in play, but we also have to look at a bit of domestic politics in India, particularly
Well,
with
well,
respect to
he doesn't
Russia.
have a lot of wiggle room, does he? I mean, when you look at what the Americans want,
Exactly.
Mukesh, they seem to want access to the agricultural sector of India. They want to be able to bring in their, genetically modified everything, and that obviously for a country in which I think some 60% of the Indian economy is dependent on agriculture. How much room does Modi have to play with here? Practically none would seem to be the domestic politics. Mukesh, I know you're not living in India anymore, but give us a sense of where you think Modi's ability is to meet Trump halfway on anything.
No, I was just recently in India, met a lot of people, and I'll be coming next week also to Hyderabad, Sean. Quick take is that you're right that there is not much wiggle room, and as the day goes by, the wiggle room probably even reduces because the stand's getting hardened. But also, let's not forget that the person on the other side can absolutely turn around, and every time when Trump speaks, he says Modi is a good friend. So I'm sure that there is much more wiggle room which can be created from the US side to get a deal done. The hardening of the stance can change, and Modi probably may not have to do a lot to get to some sort of a deal. So I guess the wiggle room will come from possibly from the US, but on this agriculture side, may not from India.
It could be LPG,
June,
right? Go ahead.
I was just going to say, June, given the what we've seen in the last 3 years of this conflict in the Ukraine, Russian oil has flowed, and Biden and the previous administration seem to be happy to allow it to do so, and we're still seeing relatively weak enforcement, even despite all the rhetoric by Trump. Will this, I mean, we're seeing a pop in the oil price today, up 2% on this news, but at the end of the day, once this sort of plays its way through, will it be a game changer? Will it shut in Russian oil, or will Russian oil just find a home somewhere else?
I think given how resilient Russia has been for the last 3 years, they will be able to find outlets somewhere. Obviously, China has been the well talked about potential switch with India. And just say if we see China taking more euros, then that whatever they have been taking will then get into China. So it's kind of like it's a shift of molecules rather than an outright loss. We only probably see a shut-in scenario if logistics come into play. Some infrastructure gets, hit by some drones that will severely limit the outtake of oil from Russia, and then the production side cannot run because of that, rather than from an actual flow to other countries.
Rahul, just picking up on the shipping angle here, there's a lot of reporting that we have over, I think, 1 billion barrels on water that is on the slow boat to China, or as the saying goes, the slow boat to anywhere or nowhere. Where's that playing in? How real is that?
No, so we see the numbers in via our product platform, Commodities at Sea. We are looking at 1.2 billion barrels today, right? 1.2 billion barrels.
1.2 billion, is that what you said?
Exactly. That's correct, right? So
Wow.
we do have that much water on, or rather, that much oil on water, right? And you
And
can also
how do you brand that? How do you categorize that? Is that
is long.
not going anywhere, or sitting
No,
still, or how does?
no. So when you say oil on water, you are talking about a floating pipeline, right? So these are ships moving in. You include that as well. We're not talking just at the
Okay.
vessels which are sitting into ready to discharge. You are talking about more Atlantic oil coming into the Asia, right? So that also is
Okay.
adding, because those are longer voyages, right? Coming
Yes.
from Brazil,
Yes.
coming into US, Korea, and so on, right? But you are
Yes.
looking at that as well. And I think if you go back few weeks or months, we were not actually seeing those OPEC plus barrels coming into the market. We've started seeing that, and that's also added to that glut which we are seeing and reflected in the tanker freight rates, right?
And Mukesh, speaking about all that oil inflow, OPEC supply, OPEC plus adding barrels, and yet the oil price is holding and jumping 2% today. I mean, a 2% jump in any normal day of the week is quite a big jump, indicating a sense of tightness, a supply shock. That seems a bit misguided. Your thoughts on the market reaction today for what seems to be a fairly unknown possibility, and two, if it ever happened, it would be slow and dragged out over many months. But it is not a tight market, is it?
Well, if you look at the time spreads of Brent, they are almost near contango. So I think that is telling me something that there is potential of real glut happening, but so far not yet. And my view is that OPEC guards that number probably most than the oil price. So they can tolerate a little bit low oil price, but they will not tolerate easily the market flipping to contango. So I would say that wait for some actions from the OPEC side or other parts, that there will be some supply risks are there. And that supply risk is shown whether it is Venezuela, whether it is Colombia. Colombian president made a big statement. So I think some disruption might come there as well. And also there was a news from the Chris Wright about buying the SPRs, million barrels SPRs as well. And the bid closes on the 28th in a few days. So I guess we have talked demand to death on demand weakness. My view is that it's the supply risk, and that is probably keeping the market, a little bit supported and not letting it go below the 60s. But the rallies will come, but they will fade fast also.
Looking at the situation, obviously we've talked a lot about India, June. What about China? Where is China at the moment? We saw some weak import numbers last month. Is that a blip, do you think? Has China stopped buying for this inventory build that it's been doing all year? Or your thoughts on that?
For China, it's about the crude import quota. They are currently quite limited already going into end of Q4. So the discretionary buying from the non-state refineries, the independent refineries, will be kind of their hands are tight right now. They can't import a lot more. So it boils down to then how much
about independent. You're talking about the teapots, that their quotas are, the government quotas given to the refiners are now maxed out for the year.
Almost maxed out. They have to ration it all the way to the end of the year, right? So there is not much more discretionary buying they can get from these players. So we are then looking at the state-owned refineries to step in to buy. Right now, we are in the midst of peak turnaround, so there is indications that they don't need to buy so much, and maybe any more support will come in December. The stockpile story was all the way kind of a flat price story. So by right, we should start to see them coming in to buy again, especially after the Golden Week was over. But there's not much big signs in the market that China is back to buy. So it does seem a little bit bearish from that front.
Maybe
Rahul,
Sean,
is that yeah, go ahead, Mukesh.
No, I want to understand where the number comes from, because if I look at the Vortexa trade flow data, July was the lowest seaborne import, somewhere around 9.89. But the September and October till now, till the last week, the numbers are somewhere around 11.7. So I don't really see China slowing down. So I want to understand more on that.
My view is for the I'm looking from China's buying perspective based on the current trading window, which is we are now trading for December loaders, and I don't see as much activity as 2 months ago, which is then showing in the trade flow reports.
Okay.
The Reuters reporting, I think earlier this week or late last week, for the September numbers were basically indicating that the imports in September were down sort of significantly from the earlier average for the year. That's what the reporting was. But a lot of these details are fairly inconsistent.
Correct.
But
Yeah.
looking at the general China demand outlook, given that we have a situation where the macroeconomic numbers have been we're looking like they're recently, the earlier part of this week, down below 5%, and that the lowest in whatever number of years and so forth. The China's headlines seem to continuously indicate a bearish outlook, and yet they seem to continuously outperform expectations. Your thoughts on that, Mukesh, going forward?
Well, I saw a very good reporting and discussion by one of the bankers recently, and what I understand, Sean, is that the slowdown in the exports is not going to offset the weakness in the domestic demand. And I think the projections are that Q4 will turn around to be maybe a 4% growth quarter. So what that tells me, I read it in a different way. That tells me
Yeah.
that there is more policy push going to come rather than China will sit idle and say, let it be 4%. There will be some action. And possibly, I would also say that let's keep an eye on Trump's visit to Asia. My view is that Trump will not travel unless he has a sign of a victory, because he will not get out. So I read China will do some policy stimulus, something going to be announcement coming soon, and Trump and China might get a deal done. Those two, to me, are probably more bullish sentiment. So I would not be that bearish as is generally being talked about.
And you're saying Trump's meeting with Xi, which is the sort of heavily flagged summit, they have not yet met since Trump came back into office. And obviously, there's been a very big trading, I don't know if we call it a war, but certainly a big trading face-off. And most recently, in the news around the rare earths, new restrictions on the exporting of rare earths out of China. The market moved quite dramatically on that. It sort of moved off its handle where it sat happily at $65 on Brent for most of the third quarter, and now has dropped into the, knocking on the door of 60, except since today with this India news. But Rahul, your thoughts on that? Is this, if there was this long anticipated sort of meeting between Xi and Trump, could it deliver a bump up? Could it deliver a price adjustment? The expectation of it, the rare earth face-off, put $3, $4 drop on the oil price. Could that come back?
So just before that, right, taking a step back. So
Yes.
Mukesh was talking about US and China. This morning, all of Indian markets is buzzing with expectation of President Trump meeting Mr. Modi at the ASEAN summit and getting the November deal done, right? So the goalposts are shifting. What I mean by that is, like Mukesh said, he would want to travel. If he doesn't get the Chinese win, maybe he gets the Indian trade deal done, right? We are all reading our news lines and what's coming overnight from that markets, right? But that's one thing. Certainly, if there's a deal, that would send a positive. Yeah, go ahead, Sean.
No, I was just saying that the ASEAN, one wouldn't normally have such expectations for what
Exactly.
is more or less a shake hands kind of meet and greet sort of summit, rather than a place to unfold major trading deals. But nonetheless, these are the things that are impacting the market at the moment, the China one and the India one now. But the expectations that China deal could push the oil price back up into the mid to high 60s where it was sitting. The average for the year is still above 65. Could a deal with China?
More sentiment, right? I think Mukesh made a great point. It'll still continue to fade. I think that's our S&P house view as well. I think year-end forecast is somewhere lower than 60 and 58.
Yeah, you guys made at
57, right?
APEC. You announced at APEC. You guys
Exactly.
announced a $10 drop from Brent from whatever place it was at the time, which was around $66.
66, yeah, exactly, right. So we are at 57, 58. I think still sticking to that view. So there could be a trading momentum sentiment play with any of these deals get done. But just one more point, right? Mukesh mentioned some numbers. We are seeing our data, October is looking at close to around 11 million barrels per day for China, right? So still maintaining. We did see a drop in September a bit, but October numbers are still looking quite strong for China.
The import numbers, 11 million through the fourth quarter.
11.6 as of today. I think somewhere it will settle around in that range, but pretty strong, I would say.
June, let's just widen out the lens a bit to the rest of Asia and Asian demand with the macroeconomic framework that we're currently living with, i.e. the easing of the Fed, interest rates are on a downward track, the weak dollar, this trade war continuing with its different tariff levels. How is the rest of Asia performing and handling now 6-8 months since this trade war face-off with the weak dollar? They must love that. Low interest rates, that's good too. Where's the rest of Asia?
I think the market in Asia has sort of adjusted to the new tariff regime. There is a continuous expectation that the Chinese exports would have actually flooded our market here, causing a dump of exports into Asia and then depressing the economies here. Haven't seen that very much yet. Could be a lag effect. But the economies here are bracing for that. And a lot of governments are also stepping in, trying to avoid that situation from happening. So as of now, I think we are still cruising. Nobody is feeling the outright collapse yet. And still hopeful for any big trade deals to be done that will benefit the rest of the region.
Let's go to the survey question, which is tackling this point of India. Would India's reduction of Russian oil be bullish or bearish for oil prices? Obviously, the pop in the oil price today would tell you that it's a bullish outcome, or the possibility of it at least is bullish. But is it bullish or bearish or little impact over time? The idea that this oil will drop off a cliff or be locked in, or Russia will not be able to sell it elsewhere, makes the market tighter, or does it just push it into a different geography and it be bearish because the Russians will have to sell it for even cheaper or even greater discounts to others because they'll have to make it even extra attractive? Or a little impact over time, it'll wash through and end up not having much over the period of 3 to 6 months. So please let us know your thoughts on that. Mukesh, just looking forward on these issues and just listening to June there, it feels like that has been the narrative for the whole year, waiting for Godot. It feels like now, that great Irish play by Samuel Beckett, and Godot obviously never arrives. That's the whole point of the play. But disaster and doom is just around the corner when Godot comes, and yet it's not arriving. We've had some major things to deal with this year, and a lot of noise on the trade front, but yet global growth is continuing to perform, etc. Your thoughts? Is this the final sort of quarter of reckoning? Do you buy into that general narrative, Mukesh?
Absolutely not. I don't buy into that, Sean. I guess
Why not?
that a lot of people got it wrong. Probably I also, for a moment, believed when there was a lot of thought around the taco trade. As I mentioned previously, I call it the tide trade. Trump brings impact on the market.
Give me the acronym there. TIDE. Taco is Trump always chickens out. What's TIDE?
So TIDE is Trump influences drive events, something like that in the market. I just created one. So to me, it is that we will see more waves. It is not deal done. It is not settled yet, because then in 2026 will be about execution of these deals. So this is 2025. We might get some more deals done, like Trump did the deal with Australian Prime Minister on the rare earth. So I think it is a good success for him. But 2026 will be about the execution. And in a geopolitically, I would say, strife where the institutions are not working strong, the executions of these deals will be difficult. So I would not say, Sean, that this is doom all be all. I think these deals will help and support the market, but the volatility, and it will continue. We will continue to see the Trump waves, and not in one direction, and they will grow.
Yeah, but deal or no deal, Mukesh, deal or no deal, whatever they may look like, the oil is going to flow. The OPEC Plus are keeping increasing supply, even if it's incrementally smaller numbers. Although there is reporting that OPEC Plus might be looking at bumping it up again to bigger numbers, like they did when they started the first round of increases in the second quarter. It started at a small number and then they tripled it. If they do that again, but even if they don't, it's an increase all the time at the moment, every month. And so supply, this idea of surplus supply with a weaker demand consumption picture, prices are on a downward draft, as Rahul said. S&P is calling for $57, $58 Brent. Do you see that? Do you subscribe to that thesis that this surplus supply, this 1.2 billion barrels of oil on water, that this will finally break this fairly resistant $65 Brent back?
My short answer
You
is again
subscribe to
no.
that?
No,
No?
I don't subscribe to that. I would be watching the time spread. So to me, the number one thing is there can be a little bit times of low oil price, but contango on a sustained basis, that is where I would really say would be the biggest event for a market shift angle. So OPEC, again, they can cut back, and my view is that they announced this target increase. Watch my words, target increase, not real production increase, so that they can announce those cuts again, and even those cuts may bring some more support to the prices. So be ready for the cuts to come back at certain point of time. OPEC will not sit idle and let the market slip into contango. Some oil price here and there, few dollars down, but I think 60 is probably the floor, Sean. So I don't subscribe
Rahul,
to
do you give us your thoughts on that, Rahul, in the sense of, are we seeing that Mukesh's outlook in the shipping and the tanker rates, that there's more bullishness in that space? I mean, or are the tankers being used for storage rather than for destination?
Certainly, I think contango is a great news for tankers, right? Whenever contango happens, you certainly need more storage space, and we've started seeing bits of that as well. But if you hear frontliners, some of the biggest tanker owners, they're very excited about the remainder of Q4, right? They are expecting tanker rates, particularly for the big VLCCs, to certainly
Which
cross
also we're going
100,000.
into the weak demand period of the year. We're
Exactly,
in
right.
the prices holding.
Indeed, right? So I think we are seeing a bit of that structure play out in the shipping markets, particularly on the big tanker rates, even flowing down to the second tier Suezmaxes, right? But I think one thing which I want to add here is we haven't touched upon, I think, the EU sanctions on January, particularly for India and Turkey. I think what would that do, right? Because we're talking about the chain of custody in terms of how do you, and they just came out, I think, yesterday, the notifications in terms of the details. How do you segregate that refinery operations, right? That particular cargo has to be non-Russia, and then only you can send into Europe. So we'll have to see how does that also play in for Indian refiners to buy that crude and then send it back to Europe or something of that process.
Well, June,
refined
let's
product to come.
just close out on that with June's. There's been a lot of talk, June, about jet and diesel strength in the market right now, particularly in the East. What are your thoughts on that and this idea of sanctions, the European sanctions basically trying to police the Asian refiners, taking the Russian crude and sending it back to Europe as products?
Okay, first of all, the Singapore prices for jet and diesel has been really strong. We are looking like Sing 10 Brent crack close to $22 per barrel for November, and has been increasing since September. Jet prices, it's also having
why are they increasing?
Both the jet side and the diesel side has stronger demand. So for the jet, it's now 50 cents higher than diesel, which is rare because the most of the year jet fuel price is actually below diesel in the negative territory. So first of all, for the jet story, we had the El Segundo refinery fire that opened up the jet up from Far East and Singapore to US West Coast. We are now in winter restocking season for Japan that relies on Cairo for heating demand. Also, we are in peak supply refinery turnaround, so reduces supply of both jet and diesel in the east. That's expected to last until November. And finally, there's a diesel spec change from summer to winter specs, requiring more jet blending into diesel to meet the more stringent cold flow properties. So we are now then seeing diesel getting stronger as well in the east. And actually, this period of time, we are expecting swing barrels from the AG and West Coast India to point west. But because of the strength in the east, it's now pointing to Singapore. And this is all actually very bearish, very bullish ICE gas oil. I think another bullish factor or why diesel has been so strong in the East is because of China not issuing more clean product export quotas for the balance of the year. So China is not there to save the day. On the
China is not
Europeans-
there to save the day. Yep.
I get
Yeah, because
you.
they have the spare capacity, but they're not running up to produce more middle distillates. So on this January ban, what's going to play out is all about enforcement. As what Rahul pointed out, if the refinery is somehow able to segregate or divert the flow of Russian crude within the refinery and say that, hey, this is non-Russian crude origin, I'm still going to go to Europe. Then the loophole is open. So it's all about enforcement.
It's all about enforcement, and it's clear that enforcement, if anything, this year has probably been a paper tiger, no doubt about that. And it's hard to see, even with all of Trump's rhetoric, that that enforcement is suddenly going to be more robust. I think it's more smoke and mirrors, really. And China is not going to come and bail out this oil market. It may keep it propped up, it seems, as it is, giving that $60 to $65 floor. But it's not going to give it much more than that. We're going to have to wrap it up there. Brent trading up 2%. That's a big pop in these times. 2% move in the oil market. We didn't even mention the 6% drop in gold yesterday, which of course has been a whole nother gold rally, which 6% sell-off is quite huge on any day of the week. Biggest move for, I think, a dozen years. So there's a lot of warning signs out there, particularly in the gold markets, by its rally up so high, now by its sell-off. Meanwhile, the financial markets are still drinking lots of punch. Mukesh Sahdev, thank you so much. Founder and CEO of the Brilliant X Analysts, new company firm that Mukesh has created out there in Australia. I'm sure it'll be of great value to all of your clients. Rahul Kapoor at S&P Global Commodity Insights in Singapore, as well as June Go at Sparta Commodities in Singapore. Thank you so much, you guys, for your insights today. An oil market that looks like it finally has something to talk about. Well, it's always got something to talk about, but it's actually moving what had been a kind of a price stuck. Deals could be transformative in the sense that the oil market could move quite a lot higher if indeed deals are done with China. Thank you, guys. Have a great week. All the best.
Thank you, everyone.